friends, welcome to daily market analysis, and this is for tomorrow, November 12th, Tuesday, 2024. So as usual, we'll be going on through all of this. Let's get the chart first. So here we have the Nifty 50 charts, the Bollinger Bands showing contraction with a bearish bias. So the expansion downside is temporarily halted, you can say. And the candlestick that's formed with the Nifty is it's a small body which is indecisive, and it's almost like an inverted hammer, which could be indicating possibilities of reversal if the price managed to move above the high of this candle. Similarly, Bank Nifty, you see that the Bollinger Bands is already in sideways since almost a month. October it was doing the same, and it's absolutely consolidating in a range between 52,500 and 50,200. So that range is still intact, and today we have a green candle, and the bias of Bollinger Bands is turned bullish. Consolidation, sideways movement, bullish, indicating more sideways moves as of now, but the bias is turned bullish. Candlestick is also green, but it looks like an inside bar, almost like an inside bar of the previous candle. So that way, consolidation is reconfirmation there. Now the next thing to see would be the support resistance levels, right? So the major condition is going to happen with this 20 exponential moving average that's coming at near to 24,500. Once that's clear, 24,700 will be the next hurdle where 50 exponential moving average is there, and then from there 25,000 will be the next major resistance hurdle. After that it moves it has to move ahead and clear the 25,250 where previous resistance was there before that. So 25,000 is major hurdle, and then 24,500 before that, clearing candle green above that is first hurdle. Downside support seems to be the rate test of the previous swing lows that's coming at 23,860. And with a very good support, previous swing low, if it is breached, a new lower low would be made as it's lower low, lower high pattern clearly seen. Next stop would be 23,463, which is a 200 exponential moving average, which will be a major support. Close by below we have 23,300 and 23,200, which is having Fibonacci 61 and the supports that's coming in. So that 23,200 would be the last place, and any breach from there would be more than a correction. It may be a severe. The correction may turn to severe correction in that stage when Fibonacci 61 retracement level of the Nifty also is breached. So that's all about resistance levels. And Bank Nifty similarly, the first resistance will be to get out of this 52,620. That's where that box consolidation since almost a month is happening, and then it needs to close above that, and then close above the 52,800 where window gap resistance is there. Once that is clear, 53,360 is the place where the neckline of the couple handle will be breached and can be breakout from there. Downsides, the supports would come in. The major one would be able to stop these previous swing lows that comes at 50,200. But the Fibonacci 50 retracement level also is there. If that is breached, it has to find support at 50,000, and 50,000 is also breached. Then 200 exponential moving average at 49,740 is the next supports. That is also breached. Then you have the Fibonacci 61 that comes in at 49,300 nearby levels. So that's the support resistance of the Bank Nifty. Let's try to understand what happened in the market during the day. So if you look at the weighted capital markets, based on the market capital, try to understand. The greens are seen in the IT. So IT is the one that moved really. IT sector, TCS, HCL, first are green, and then Nation Paints and Britannia has got a silver blow. So the Bank Nifty what's moving is no big moves as in except for the IDC Bank that moved 1%. So the major movement has happened in the IT. So IT is what is flying as of now and holding the market from crashing down along with the banks. And among the banks, if you look at the heavyweight stocks, it's HDFC Bank that is more than 0.7%, and then it's almost near a major resistance zone at 1,800. If that is breached, and like weekly close or a daily close consistently comes about that point, then we may see a big breakout that can be really big. Will it do that or not? We'll have to wait and see. The volumes are not that great, but HDFC Bank has been trying to break out of that major resistance on since several months or probably years, couple of years. HDFC Bank is stuck in the 1,500 and 1,800 zone. So that HDFC Bank and ICICI Bank is what is holding the market as long, along with the IT sectors, the Infi and the TCS also that's performing. That's about the heavyweights, and Reliance is what is causing the problem, which is going to the bear zones and the resisting severe sell-off is happening in that. Kotak Bank sideways as usual, and along with Reliance, ITC also gives a threat, but the correction seems to be extending. This may be buying opportunities in that particular stock specifically. If you look at the different sectors, the IT sector, all these sectors that is performing and then still sideways, but heading towards the short-term bullish zones. Otherwise, all the sectors today have shown red, have 1% pharma, 1% metal, or nearly 1% FMCG, reality flat, and auto flat. So what is causing trouble is the auto and the reality. They are in bear zones in the short term. Others are sideways. The only sector performing is IT. Mid cap and small cap, they are having undergoing corrections, nearly 1% lost in both. So the 9% correction was done earlier, and it seems to be going back to that bottom of the channel. So it's a broader market also where it's facing the selling pressure. Now if you look at the US markets, they're all at all-time highs in green, which is positive as some other market. Dow Jones is S&P 500 and then Nasdaq, they're all green and at all-time highs. Momentum bullish, absolutely. So it's for the US markets, and dollar is also flattish, but at the very top. US INR is at the very top, and rupee is the weakest level of 84.35, historic low levels, all-time low levels of weak rupee. And dollar is slowly strengthening, a wide range bullish candle is seen there, 0.64% up move, and oil is dipping after the cool off in the Middle East crisis is seen since last one week or so. Gold is cool-easing as the dollar is inching up. Gold is easing and then going through a correction, and it could find some support like a sideways interest in normal gold. That's about the commodities in the other market. So FIs have been selling today also. They might have said they have not stopped selling, not even for a single day in the last 1 month. It's 1,25,000 crores of selling that has happened in just October alone. So there is a concern, and domestic institutions fund flow is there. The confidence of the retailers in the market is seen, and that money is what is holding the market from crashing. Today also same thing might have happened, but today's trend has no doubt. To sum it up, we have an IT and the banking index, HDFC and ICICI Bank, that's holding the markets from falling, but markets remains to be weak overall because of the continued FIs selling, and consolidation of sideways movement is what you see, but it could turn to be expanding once again downside anytime. So you have to be cautious unless the price action turns to be breach the higher, the lower low, lower high pattern. Until then, we have the risk of a sell-off that can come into making new lower lows. So be wary of that facts. This is some of the fundamental reasons behind the recent corrections. The market so far is corrected 9.5% max. It's still trying to hold the 24,000 as major support. Let us see whether it will be able to hold that. If that does not hold, then it can go as low as 23,200, 300, that zone. So you could find the next support. Otherwise, if it consolidates here, and by the time some positive things comes in, the market can bounce up from here and then make breach that correction, finish off this correction at the 10% less once again, right? So that's all I have. The view is clear, sideways with bearish bias is what the view is. Market is weak, but we'll have to hope that the bank nifty and the IT would do the trick. So play it safe. That's all I have. Thanks for watching. Happy trading, happy learning. Bye bye.